whether it would need to be lower as part of your inclusive growth strategy.
Right. So
all right, guys, we are live. In the background, I am going to be listening to the Fed conference.
Unemployment rate.
So today's stream is going to be a little less exciting than normal. Where's my chat?
A very broad range of metrics when we think about what maximum employment is. And one of the things we look at is
there we go.
Unemployment rates and participation rates and wages for different demographic and age groups and that kind of thing. So we will do all of that. So I think if
Sorry, what I was saying, guys, is we're going to be listening to the JP speak in the background for as long as he is speaking. It might be the whole stream. I don't know. Might be 10 minutes. Who knows? But we're gonna listen to it.
You saw a really strong labor market, and you saw wages at the low end moving up faster than everywhere else. Something that's great to see. We also saw the lowest unemployment rates for minorities of various, for African Americans, for example, and also participation rates. I mean, we saw a really, really healthy set of dynamics. And by the way, there was no reason why it couldn't continue. There were no imbalances in the economy, and then along came the pandemic. There was nothing in the economy that looked like a buildup of imbalances that could cause a recession. So I was very much thinking that the country would really benefit from a few more years of this. It would have been great. So we're all quite eager to get back to that. We also said we wouldn't raise rates just in response to very low unemployment in the absence of inflation. So that was another aspect of it, because we saw that really benefited labor market participants in a broad and inclusive way. That's, of course, not the current situation. We have significant slack in the economy.
Hey, Alan, what's going on?
Well above target, not moderately above target. So that's really how we think about it. It isn't really just targeting the headline numbers, but it's about taking all of those things into account in your thinking about what
Dixie's still pumping.
I guess just to follow up, should there be a significant gap between black unemployment and overall unemployment for structural reasons that are outside of the control of the Fed that other people should be doing something about, or should the gap be narrowed?
This man just said what I was. Hold on, I'll let him answer.
First of all, ideally there wouldn't be any gap, of course. We would all love to see no such gap. This is a persistent gap, and it's very hard to explain based on typical metrics. It's quite troubling, but it really is. We have famously broad and blunt tools. I think eliminating inequality and racial discrimination, racial disparities, and that kind of thing is really something that fiscal policy and other policies, frankly, education policies and that kind of thing, are better at focusing on. I think we've identified the part that we can do, and we'll do that part. But I've always been clear that it's going to take policies broadly across society to work on these problems.
He needs to be very blunt and say, why the fuck are you asking me about that? I'm the chairman of the Fed. I don't control that. I can't stand when they ask him racial inequality questions. Like, he is the chairman of the Fed. His policies do not affect that.
Included changes in bank regulations and possibly selling defaulted or non-defaulted treasuries and buying those who are that are. Are any of all of those still on the table? Do you think any of those would work? And what would happen to the economy, in your view, should the debt ceiling not be raised?
So I missed the first few words, but I think I got your question. So it's just very important that the debt ceiling be raised in a timely fashion so that the United States can pay its bills when and as they come due.
This is another.
That's
I'll let him finish.
Critically important thing. The failure to do that is something that could result in severe reactions, severe damage to the economy and to the financial markets, and it's just not something that we could contemplate. That we should contemplate. I'm not going to comment on particular tactics or things like that. I'm just going to say that I think we can all agree that the United States shouldn't default on any of its obligations, should pay them when and as due, and that no one should assume that the Fed or anyone else can protect the markets or the economy in the event of a failure fully protect in the event of a failure to make sure that we do pay those debts.
Every time we run into the debt ceiling, they try to play this fear-mongering game where they're like, oh no, we might not raise the debt ceiling this time. It's going to be a catastrophe. Guys, they raise the debt ceiling every single time. Don't fall for this stupid, oh no, what if we don't raise it bullshit. They do every single time we hit the debt ceiling. It's such a fucking media fear-mongering bullshit. They're going to raise it every time.
Hi, thanks so much. Senator Warren sent you a letter last week urging the Fed to break up Wells Fargo, citing what she called ungovernable behavior from the bank. I was just curious, under what circumstances would the Fed actually consider revoking a financial holding company's license, and if the indiscretions at Wells Fargo, in your opinion, warrant such an action?
So we're, of course, very closely monitoring.
Hey, Native, what's going
Wells
on?
Fargo's efforts to fix
Sinma,
its
good to see you.
widespread and pervasive problems.
Hey, Tiny.
They represent a serious matter to us, and the firm is required to remediate them. And we will take appropriate supervisory action if the firm fails to meet our expectation. We continue to hold the firm accountable for its deficiencies with an unprecedented asset cap that will stay in place until the firm has comprehensively fixed its problems. We're not going to remove that asset cap until that's done. Bottom line is we'll take strong supervisory action if a firm is engaging in unsafe and unsound practices or violating laws, but I can't speak to our confidential supervisory assessments of any individual bank.
Thank you. Now we'll go to Michael Derby.
Thank you for taking my question. You noted earlier in the press conference that you weren't aware of the trading activity of the Boston and Dallas Fed bank presidents. As you know, all 12 regional Fed bank presidents just went through the renomination process earlier this year, and Governor Brainerd described it as a rigorous process at the time. So I want to know, did anybody at the board level know about the stock trading activity? And going forward, do you still have confidence in the Dallas and Boston Fed bank presidents to do their job?
So these, I don't need to tell you, people file these reports annually, and I think they were just quite recently filed for 2020. So I don't have any reason to think people at the board would have known about particular trading that's going on. They will see that. There are people at the Fed who see that. See the trading reports when they're annually filed. In terms of having confidence in that sort of thing, I think no one is happy. No one on the FOMC is happy to be in this situation, to be having these questions raised. It's something we take very, very seriously. This is an important moment for the Fed, and I'm determined that we will rise to the moment and handle it in ways that will stand up over time. I'm very reluctant to get ahead of the process and speculate, though, about different things. And when we have things to announce, we'll go ahead and do that. But that's really what I have for today.
So one small follow-up. I mean, I know that you didn't have the 2020 forms in hand, but you would have had past year forms in hand. And at least in the case of like the Dallas disclosure forms, similar trading activity was shown in years past. So that in theory could have been something that came up in the renomination process. So
that's a good question. So, the 5-year review that we do under this unusual provision of law where all of the Reserve Bank presidents are reviewed for reappointment at the same time every 5 years. That is really a broad review.
If you guys are just coming in, we're listening to Pal speak about the recent FOMC information that dropped at 2 o'clock.
Concern or private concern about something that someone had done. We wouldn't wait for the 5-year. We wouldn't wait that day if there were concerns.
We'll go back to our normal stream
right,
as soon as he's done talking.
As I mentioned, we have had a framework for a long time, and it's similar to what other government agencies have, only it's a little stricter. And it is that you can trade financial instruments, but not specific ones like bank debt. You can't trade during the FOMC period and during the meeting, the blackout period, and then during the meeting. And then you disclose all this, and we have disclosed it for years. So all of these things have been going, to the extent they've been going on, they've been a matter of public record. And, but nonetheless, so that, it was seeming to work just okay. And now you look at
Long story short, they basically said rates are unchanged. They're thinking about increasing the rates next year. They think the taper is most likely going to be pushed to next year. It might start in November. They're going to continue their bond buying. What else? That's pretty much it.
rather than once every 5 years.
Thank you.
Thank you. Let's go to Jean Young.
Thank you, Michelle. Chair Powell, I wanted to ask about how the Fed would balance the two parts of its dual mandate. If inflation stays elevated, but we still have a labor shortage and participation remains lower than ideal, would you hold off on raising rates, or how would you think about that? Thank you.
Well, let me say one thing. You're looking for conditions consistent with maximum employment to lift off, and those conditions can change over time. So you're not necessarily bound by a particular level of the unemployment rate or the participation rate or anything else like that, which can change over time. But more to your point, really, we actually have a paragraph in our framework, and something like this has been there for a long time. I think it's paragraph 6. And you're talking about a situation in which the two goals are not complementary; they're somehow in tension. And if we judge that is the case, what it says is we take into account the employment shortfalls and inflation deviations and the potentially different time horizons over which employment and inflation are projected to return to levels judged consistent with mandate. So we used to call that the balanced approach paragraph because it had those words. So it's a very difficult situation for any central bank to be, to be in a situation where the two goals are in tension. And that paragraph tries to address it by saying we would sort of weigh the equities between the two, how long will it take and how big are the gaps and that kind of thing. We don't really think we're in that, we're sort of in that situation, I'd say, in a short-term way. But we think, we do expect that, that this is sort of because of the COVID shock and the reopening and all that, you're seeing this temporarily.
Great. Thank you. We'll go to Edward Lawrence.
Thank you, Michelle. Thank you, Mr. Chairman, for taking the question. So on corporate debt, what happened with Evergrande that we've been watching, is that a preview of what could happen?
Dude, everybody says it wrong. Like, not wrong, but different. I don't even know the proper way to say it.
So what's your level
I say
of concern
Evergrande.
right
I
now?
don't.
And would you consider the Evergrande group issue a sort of a warning signal?
About the United States? No. Corporate defaults are very low in the United States right now. Corporate leverage built up over the course of the long expansion that ended with the pandemic. We were very concerned in the last year or so. We were concerned in the last year or so, and then I'd say very concerned at the beginning of the pandemic that if you've got a highly leveraged company and your revenue stops for an uncertain period, as things happened at the beginning of the crisis, we were very concerned that there would be a wave of defaults. Didn't happen, potentially, I mean, to a significant extent because of the CARES Act and the response that we undertook and all that. It was a much stronger response than we've ever had. And I think for whatever reason now you have very, very low default rates now among corporate debt. The Evergrande situation, it seems very particular to China, which has very high debt for an emerging market economy, really the highest that any emerging market economy has had, and the government has been working to get that under control. This is part of that effort. The government put new strictures in place for highly leveraged companies.
It's funny they consider China an emerging market.
Is dealing with those strictures, and it's something they're managing. In terms of the implications for us, there's not a lot of direct United States exposure. The big Chinese banks are not tremendously exposed, but that you would worry that it would affect global financial conditions through confidence channels and that kind of thing. But I wouldn't draw a parallel to the United States corporate sector.
Thank you. We'll go to Brian Chung.
One sec.
Chairman Powell, just wondering if you could give us an update on whether or not you've had conversations with the White House about a possible reappointment, and then whether or not you would like to be reappointed as this chatter kind of builds up. Thanks.
I think the phrase goes, I have nothing for you on that today. Sorry. I'm focused on doing my job, every day for the American people, and I don't have any comment on that, Brian.
Sorry about that. Let's go to Greg Robb.
Thanks for taking my question, Chair. I was wondering if in your discussion about the tapering, that you said that officials think it's appropriate to end around the middle of the year. If there was any discussion about what happens to the balance sheet, then I've heard some.
Sorry, I was going to say I wanted the question about Evergrande to be more so, will it affect the U.S. economy? Not like, will something like that happen in the U.S. economy? Because obviously it's not going to happen. Our corporate debt is much lower, as JP said, than a market like China. But I want to know what his take is on if they collapse, how will that affect our economy?
But we want to get through this taper decision and then turn to those issues, rather than start, thinking about them now and having the minutes discuss them and get people thinking that we are, focused on those issues, because we're really not. And we do have the experience of what we did last time. We've watched other countries and what they've done. So I think we'll be able to get to sensible decisions fairly expeditiously when it's time, but it's just not time yet in my thinking.
Thank you.
Thank you. Let's go to Scott Horsley.
Thank you, Mr. Chairman. You talked a little bit about inflation expectations, and there does seem to be something of a divide between market expectations and the views of professional economists, which are pretty much in line with the FOMC members, and lay people's expectations, at least as reflected in the recent New York Fed survey. How much weight do you put on lay people's expectations, and what do you think accounts for that divide?
So let's just take the household surveys generally. The New York Fed survey, let me talk about that specifically, and this is from the New York Fed. It's only an 8-year-old survey, and it does seem as though they're looking 3 years out, and it seems like there's a high correlation between 3 year and 1 year. For the most part, surveys are showing that households expect higher inflation in the near term, but not in the longer term. And that's also what expectations are showing. So there are many, many different inflation measures, of course, and that's why we have this thing called the CIE, which is it's an index of it's market-based measures, it's professional forecasters, and it's household surveys. And you just put them all, it's not, it doesn't have a lot of grand theory about it. You put them all in and you measure the change. So you should be, and also you measure things like the dispersion and that's
really nice bounce happening right now on ES, bouncing off VWAP.
Inflation expectations moving up. Many of the different measures will also show inflation expectations moving back up to where they were in, say, 2013.
It can definitely affect the U.S. market, Mohammed. It doesn't matter that it's just a Chinese real estate company. It's the second largest real estate company in China. And China is directly tied to the U.S. with massive, massive trade. So if it starts hurting China, it starts hurting us. And some people were saying, I couldn't find any exact information on this, but some people were saying they are also heavily invested in the U.S. But like I said, I couldn't find anything on that, so I'm not too sure. But if they are heavily invested in the U.S., and they already said today that they were not going to be paying back their foreign investors as of right now. They're focusing on their domestic payments. So that would really fuck the U.S. as well.
Hi, sorry. You caught me off guard. Thank you, Chair Powell, for taking my question. I really appreciate it. Again, on the taper timing, you say it's going to last till the middle of next year, but with your concerns about the potential for upside risks to inflation, would you think you might need to have liftoff happen before you finish the tapering?
That's not my expectation. Of course, we can always. We haven't decided to taper yet, and we haven't decided the pace yet. So you know, it's not my expectation that we would have to. We can certainly speed up or slow down the taper if it becomes appropriate, though. Absolutely. In fact, back in 2013 when we tapered, we always said we weren't on a preset course. I think this will be a shorter period. The economy is much farther along than it was when we tapered in 2013. So it makes sense to allow the runoff to happen. It's a very gradual taper. It will be when we agree on it. And but we certainly have the freedom to either speed it up or slow it down if that becomes appropriate.
But you wouldn't expect rate liftoff to happen until you're finished with that process?
It wouldn't. No, because when you're as long as you're buying assets, you're adding accommodation, and it wouldn't make any sense to, then lift off. I mean, what you would do is you'd speed up the taper. I think if that were the situation you're in. We don't expect to be in that situation, but I do think it would be wiser at that point to go ahead and speed up the taper, just because the two are then working in the same direction.
Great, thank you.
Thank you.
Okay, for the last question, we'll go to Jeff Cox.
Thank you, Mr. Chairman, for taking the question. I just wanted to check in with you to see if you have an update at all on the efforts from the Fed to develop a central bank digital currency. I believe that the report was supposed to come this summer, and indications that it's going to come this month. But the drumbeat seems to be kind of getting louder to see where the Fed's heading.
Very good bounce off VWAP.
Can provide some update there.
Sure, I'd be glad to.
The dollar pulling back is definitely helping.
We think it's really important that the central bank maintain a stable currency and payment system for the public's benefit. That's one of our
Hughes
jobs.
is about to break high day.
We also live in a time of transformational innovation around digital payments, and we need to make sure that the Fed is able to continue to deliver to the public a stable and trustworthy currency and payment system. So there's extensive private innovation, a lot of which is taking place outside the regulatory perimeter, and innovation is fantastic.
They're talking about cryptocurrency.
But where the public's money is concerned, we need to make sure that appropriate regulatory protections are in place, and today they really are not in some cases. So with that in mind, and with the creation of myriad private currencies and currency-like products, we're working proactively to evaluate whether to issue a CBDC, and if so, in what form. We have two broad work streams, one of which is really technology, both at the board and in the Federal Reserve Bank of Boston's work with MIT. The other of which is to identify, scope out, deal with, analyze the various public policy issues. As you mentioned, we do intend to publish a discussion paper soon that will be the basis for a period of public engagement with many different groups, including elected officials around these issues. We think it's our obligation to do the work both on technology and public policy to form a basis for making an informed decision. The ultimate test will apply when assessing a central bank digital currency and other digital innovations is, are there clear and tangible benefits that outweigh any costs and risks? We're also, as you know, investing heavily right now in building a new settlement system for instant payments in the U.S. It'll be the first such major expansion of our core payment system since the 1970s. We found the case for this quite compelling. For consumers, businesses, and just ensuring that all financial institutions have access to the payment system. So bottom line, we haven't made a decision about the CBDC, but we will be issuing a discussion paper soon in order to form the basis of this public interaction that we'll have. Thank you very much.
If I can have a quick, can I get a quick follow on that?
The chairman of the Federal Reserve, as many look for a quick follow-on to what I thought, folks, was the most
All right, so that's over. Give me a second, I'll raise my desk. All right, so if you guys are still awake, that shit's boring as hell, but kind of have to listen to it. If you're just coming in, long story short, printer is still on. They're going to keep buying. He didn't give an exact timeline for the taper. They said that it could start in November, most likely going to start next year. They also said that the rates are most likely not going to change until next year. But what they did say is there is a high chance that the rates will change next year instead of waiting until 2023. So that'll be interesting. But besides that, business as usual, nothing is changing. They did give some stats. Let me see if I can pull it up. Bloomberg pulled it up for a second. It was GDP, they think, is going to go into 7% from 5.9. Unemployment's going to go down to 4.5 from 4.8. The PCE inflation is going to go to 3.4 from 4.2. And the core PCE is going to go to 3 from 3.7. So pretty much every number getting better. Basically, what that means is the economy is getting back on track slowly. And now we can look at kind of how the market reacted to all that. Yes, initially when the meeting started, it started pumping pretty hard. And then you had the conference start. And as always, when he starts answering questions, it started going down. And now that he's done answering questions, it is slowly going back up. So it seems like the market is reacting bullishly. And as I said in Discord, as long as they didn't hit us with any hard balls or anything bearish, you're most likely going to fill this gap. I said by today, most likely, but that didn't happen. So I'd say by the end of the week, you could fill this gap pretty easily, 441. If you guys did take those lottos that I mentioned on stream or in Discord, they're up over 100%, depending on when you entered. The lowest I called them out was about $1, and they went to about $2.25, I believe. So they were paying out. As far as individual companies go, I liked NET today. We called out NET on the watch list if you guys are in Discord. NET hit our first target. Our target was, 135. So 135 has been smashed. Next target on that would be around 140. So keep an eye on that. I did add AMD to the list today. I like AMD a lot. I also added SoFi. I'm going to talk about those in the analysis today when we do the analysis in Discord. I also added Wells Fargo. I like Wells Fargo. I like the banks. They were talking about the banks in the Fed thing as well. The banks are doing much better here. If you look at XLF on the weekly, we can see there's a buy the dip signal on the weekly that's not confirmed. You confirm that in 2 days. But then we had a very nice bounce off the OTS trail and off VWAP around that $36 level. So the banks look pretty good. It's probably one of the strongest sectors here bouncing. So I would definitely keep an eye on like Bank of America, JP Morgan, Wells Fargo. You know the deal. Couple of other names that I was looking at today. CAR exploded up another 7%. We're still watching CAR above 102, 103. You should get a boost into 112 to 116 as your next kind of mid to long-term target. So keep an eye on CAR. That looks pretty good. Home Depot and Lowe's, the sector, that sector is still starting to do pretty good. So keep an eye on them. Home Depot has a resistance around 341. Break above that, it looks pretty strong. Keep an eye on Lowe's. You got an ascending triangle right here, kind of like a bull flag. But once it starts to get above like 209, it looks really good. It's already above 209 here, but I really need I need to see it hold above this level. So hold above the pivot, above 209, 210. Then you're looking for like 215 to 220 on that next major impulse. So keep an eye on that sector. That sector looks pretty good. Another name that was on our list earlier, but still looks pretty good today, is Visa. It's kind of pulling back to retest the 200 EMA. I would not touch Visa here, but if we do break out of this falling wedge, I do like Visa a lot, pulling back into like 235, maybe even 245. Roku, I still like Roku. We're holding the pivot down here. We just haven't had liftoff from this pivot just yet. We really want to see this start to bounce away from this pivot. At least get to like 330, 339, somewhere around there. As far as big tech goes, big growth companies, they all did pretty well today. The only bad one was Facebook, and that was due to some bad news. So pretty much everything besides Facebook had a really good day, almost 2%. Netflix doing 3.5% today. We talked about Netflix on the analysis as always. I really think it gets to 600 pretty soon. You could get 610 as well before going into earnings. But the buy the dip signals on Netflix the past 2 days has been pretty significant. So you're finally getting a bounce off that level. Our UUP position doesn't look like much. It's up 0.25%, but on the news, it was pumping on my contracts. I think they're up like 5 cents per contract, and we've got a bunch of those. So pretty nice gain there on those. The dollar looks like it's getting really strong. If we look at USD JPY, it's starting to pump. And then if we look at Euro USD, it's going down. So the dollar looks like it's starting to climb a little bit. You have Dixie getting very close to breaking out of this resistance. If it starts to hold above like 94, or 94 is a little high, probably like 93.50, you're probably going to see a nice little breakout. We have to see kind of what they talk about next week with this policy, talking about policy, right? So I don't know how many Fed meetings we have next week, but the dollar should continue. Looks like GameStop is bouncing a little bit. Not much. What else do we have moving today? We've got AMBA. It's the second biggest gainer of big companies. Not sure what this is, but it looks pretty damn good. The daily is up almost 10%, breaking out of a massive, or not a massive pullback. We had a massive breakout into a small pullback into another breakout. So this support being held above like 140 is very key. You can see the previous high that led us down was right around 130 to 140. And then we have the pivot come in right around that same area, broke out of it, consolidated above it, and now we're pushing higher. So this is clearly finding more value above this previous high. So like if we go from here to here, we can see the value being found up here. Nice little node building, and then we're breaking away from the node. So as long as you hold above like 150 at this point, it looks pretty damn good. Dollar break equals Bitcoin bearish. They don't have an exact correlation, to be honest. People try to trade them as if it's a hedge for the dollar. It doesn't have an exact correlation. You would assume that the dollar breaking out would be bearish for Bitcoin, but I wouldn't bet on it. Yes, not liking that 5-minute pivot there on the high. What did that guy buy those SPY calls at earlier? He bought them at... Where are the big ones? Right here. He bought the December 31st 448s for $11.9 million. He bought them when price was 437.50. So it's about $1 higher at this point. His delta is 40, so he's making a killing on those. Not sure if you guys saw my tweet, but there was a massive SPY block, or yeah, it was a block trade on options come in. They bought the December 31st 448s. He bought almost 12,000 contracts, which is about $12 million. They came in about 11 o'clock, so before the Fed meeting. You actually just had a SPY block trade just come in on shares over 100 million. Not a block trade, sorry, a dark pool. Nice little bounce here on the 5-minute. We did have a single 30-minute pivot today, so I didn't take a trade on ES. We did have a couple of buy the dip signals though. So if you guys like following those, gave us 3 buy the dip signals today, almost all of them testing VWAP. So nice confluence on the OTS trail and VWAP. All 3 of those buy the dip signals played out beautifully. You could have got 41 points on the high for that first signal. You could have got 30 points on the second one, and then about 27 on the third one. So that's your maximum, obviously. So even if you got a third of that, you would have been hitting your 10-point target pretty easily. Chris said, I keep losing money. What are you trading, Chris? What are you losing money on, man? I really like what we're seeing on the 30-minute ES. If you look at the past 3 days on volume profile, we had a clear bearish imbalance into a another bearish day. Funny enough, this day was not a very big bearish imbalance. It was almost balanced, but you did have most of the volume towards the low. So it was a bearish imbalance, but not as bad as the day before, even though the price looks way worse. Then we had a distribution day, a balanced day. So inside day there. And then we had another inside day today. But here's the key thing. Value is increasing from yesterday to today, and we are increasing, we're breaking out of the value area highs of the past 2 days. So price is breaking the value area high of yesterday and the day before. Not only are we breaking, we came back to retest it a couple times there during the Fed talk, and now we're bouncing off of it as support. So this right here is a very, very key resistance turned into support. So we have resistance here, value area highs, right? Draw those out, and now we have a pullback into those levels as support. Not only that, the 200 EMA is being tested and broken for the first time since the sell-off. So this is a very key area that we are seeing go from resistance to support. So we should be seeing a nice buy pressure tomorrow, But we don't have to, obviously. We got to see how we react on the post-market and the pre-market to see if we can stay above that kind of, what is that, around 43.90, 43.80. If we can stay above that for post-market and pre-market, we should be running tomorrow. Did we create a small gap overnight on SPY? I think we filled that gap. Let me see. Actually, no, we did not. Yeah, we did create a small gap. So there's a gap right here around 434.50. Hey, Suresh, what's going on? Kind of a choppy inverse head and shoulders that we have going on here. Problem is, inverse head and shoulders are bottoming patterns, not continuations. So it's not exactly the same, but the structure is. JP's done talking, Chad. He spoke at 2:30. ZS is breaking out here, another one that we mentioned on our watch list yesterday. Hopefully you guys are paying attention to the watch list that I posted in Discord. A lot of the ones that we discussed last night, we're doing very well today. Is it normal for him to speak twice in a week? It's really random, man. It's hard to say. It's not like a set in stone thing. It seems like when the economy is more sensitive, he speaks more often. But he is speaking on Friday, so it's a little strange. How did the Fed talk go, in my opinion? It was pretty bullish. They basically just said business as usual. We're going to keep pumping. Taper's not coming just yet. Rates are unchanged. Nothing unexpected happened. So as far as the market goes, that's good. We don't like unexpected, right? Can I check Adam? I checked it earlier in Discord. It looked pretty good. Yeah, really strong breakout. It's up 26%. As we always say, we've been saying this since we made this indicator. If you guys trade altcoins on the daily with the Oasis trading suite, the buy the dip signals are extremely accurate. The buy the dip signals came in on Atom around 29.60, and now it's at 38.40. So you could have got almost 30% off those buy the dip signals. So as long as it holds above the pivot around 35.90, it's looking pretty good. You sold your Atom last night at 30. That sucks, man. You sold into a support, sadly. I think we talked about this pivot. I think it was last week. Somebody asked me about Atom, and I said as long as it stays above that pivot around 29.60, you're okay. And you pulled back to retest that pivot, and you also bounced off the OTS trail. Chad, I honestly don't think it really matters who gets appointed, to be honest. I think at this point, we have gotten to a point where the ball has to keep rolling, right? They've like pumped the market so much that it doesn't really matter who's in charge. They're going to continue to pump until until they finally decide that they can start tapering at a rate where it's not going to crash the economy, right? JP keeps saying that the taper is going to be extremely gradual, meaning that it's probably going to take years. But the only thing that could happen that would extremely negatively impact the market is if somebody gets on board and they're like, no, we need to taper right now and we need to taper very quickly. So like if they speed the taper up, that is going to have the strongest effect on the market. I don't think the rates are going to be a big difference between who gets appointed, you know what I mean? I think no matter who gets appointed, the rates are going to relatively change at the same rate. But what might change is how quickly they taper. What's the name of this indicator? That's the Oasis trading suite that's giving those pivots and buy the dip signals. What's XLI? It's getting some calls right now. Oh, it's the industrial sector. Somebody's betting on the industrial sector here. They put in about $1 million into the $100 strikes for December 17th. You can find that indicator right here, man, if you want to check it out. There's also a video on my YouTube, about an hour long. If you go to my indicator playlist, I walk through how to use it, tips and tricks on using it, strategies, whatnot. It's the indicator that all of our members get. So if you guys are in Discord, not the $30 tier, but the higher tiers, you guys do get access to it. So if you guys are in Discord and you don't have that indicator, let me know. But you guys all should have that already. Pretty much our bread and butter is the indicator that I try to get all of our members to use actively. It will greatly help your trading. I don't have any plans for the next newsletter, but as soon as something crosses my feed that I want to write about, we should be having another one, hopefully by like Friday or Sunday. But I don't really have any topics that have really come across my timeline recently that I really want to talk about. I don't really like talking about the Fed stuff too much because nobody really cares, and the people that do care, they don't understand. So it's just not really a topic that I want to cover. But if I find something, we'll talk about it this weekend. Did I see your tweet? Not sure which one you mean. Did you tweet me? Like, did you DM me or something? Yeah, Doodle, I saw that. He was fudding crypto pretty hard. He was also saying that the regulations are probably going to hurt most, not most traders, but most like crypto investors or whatever. Oh yeah, I saw that tweet, FX. I appreciate that. Yeah, I've had that. I've had that for like a while now. People think my channel's underrated and they think that I'm like shadow banned or whatever. I think it's just because my style of content is not extremely exciting. Like I'm not here to entertain you guys. I can be entertaining from time to time, but that's not what I'm here to do. I think if I was kind of changing my style of like what I wanted my channel to be, if I was more on the entertainment side or more on like the look at my new house, look at my new cars, like that style of channel, I would grow a lot faster. But my channel is an educational channel, right? It's kind of boring. You guys are learning. I hope you guys are learning. I hope you guys are taking what I'm teaching you and you're using it to make money. But it's not very exciting, right? And I think that's why my channel grows slowly. But my channel grows at a rate that I think is okay. I think if I put some more time into like video editing and got some like producers to like have pop-ups and make my videos look a lot better, I could probably get more viewers. But it's not that big of a deal to me. Like I was talking about last stream, the YouTube is not my main source of income. It's more of like a hobby. Like I do this to help you guys out, right? It's not my this doesn't put food on my table, right? There's three kind of trading channels. There's entertainers, where they're trying to be funny, and they're kind of like doing like making memes and stuff like that. There's the shillers, the guys who are like, look at me, I'm on a beach with my laptop trading on vacation, and they're showing you their Lambos and they're giving you home tours of all their rented shit, right? They go out and rent a car and they say it's theirs. And then you have the educators. And I try to fall into the educational channel, like educational side of it. I had a comment that I responded to this morning, and nothing against you if you're listening who put that comment. But I've had a lot of these comments over the past few years, and whoever left that comment, you were asking me why I don't live trade on stream, and why I don't show my P&L and like flash my how much money I'm making and stuff like that. And I said to them that I'm not going to force trades just so you guys can watch me live trade on stream. I only stream for an hour a day, right? I'm not going to be like, I'm not going to be forcing trades in that 1 hour just so you guys can see, oh, here's how you enter this trade, here's how you exit this trade. We've taken trades on stream when they pop up. You guys have seen me trade on stream when they happen. But I'm very patient. I'm very disciplined. I look for very specific setups. If those setups don't happen on stream, I'm not going to take a trade. Right? If you guys are in Discord, I call out trades all day long on active days. Today, I don't think I called out very many because there wasn't really anything happening. But I call out trades all the time in voice chat. I also post trades constantly in the analysis and in my channel. So if you're looking for that side of me, if you want to see live trading or you want to see more trading examples, then that's why we have the Discord. Feel free to join the Discord. You could show us the new house, but make it educational. Yeah, it's probably not going to happen. I'm a very private person. I don't show off really anything. I'm almost done with my office, though. I do need to put up one more monitor, and then I need to hang some art, and then I'll give you guys like a little office tour. I still have boxes in my office. I've got 1, 2, 3, 4, 5, 6. I've got 7 boxes in my office. Yeah, I bought a new house, Doodle. I couldn't ignore the extremely low rates. I got less than 3% on my loan, so it was a very easy decision. Pretty weak close here. We don't want to see this pull back below the 200 EMA, and that's exactly what it's doing. You're now, what, 13, or no, you're about 7 points below the 200 EMA. That's not good. I do need some nice artwork, though. If you guys come across like any cool artwork, or like, it doesn't have to be trading related. Just like anything you guys think is cool, send it to me on Twitter. I need some new artwork for my office. If you guys read the newsletter that I gave you guys on Bitcoin, if you guys followed my levels, we bottom ticked Bitcoin almost to the dollar. Sadly, we bottom ticked it so well that I only got filled on 2 of my bids. I had 5 bids on those levels that I mentioned in the newsletter. I only got filled on 2 of them, sadly. I was trying to 10x my account on those bids. Each bid was about 2x my account. We only got filled on 2 of them, so I'm only about 4x my account right now. But we literally are bottom ticked. So if this keeps going up, I'm not going to have a target. I'm just going to let it run because our entry is too good. We are not going to throw this entry for a 5% move, 10% move. We're looking for like 60K with this entry. What is our entry? Let me see. I posted it in Discord. Yeah, right here. I'll show you guys. Little humble brag. 39,650. The low is 39,487. Less than $200 from the exact bottom. Probably the best entry I've had all year. Actually, I take that back. We had that scalp entry where we scalped the bottom. Which one was that? It was this bottom, the big candle. We scalped almost the exact bottom of that candle. That was probably the best entry of the year. Yeah, I'm not sure, Mortal. I have no idea, man. I think as far as the Fed goes, when they talk about cryptocurrencies, if they're ever going to get heavily invested into it, they're going to start their own currency. They're not going to invest in any currency that's already made. But all right, guys, so I'm going to call it on that. Appreciate you guys being here today. It was boring as hell, obviously. We just had the Fed meeting and whatnot. But I'm going to post the analysis after stream. We'll give you guys some new names. I had a couple names I added to the list today. So we'll post those in the analysis channel. And then I'll be back streaming tomorrow, 3 p.m. Eastern, same time as always. I forgot to hit my buttons today, but I'll go ahead and I'll hit them now. If you guys are new to the channel, make sure to subscribe. If you guys like the video, make sure to hit that like button. What else do I have? That's all I got, man. 3 p.m. Eastern tomorrow. If you guys are on stream, if you guys are in Discord, I'll see you guys tomorrow at 9:30 in the morning. Peace out.